Good morning, everybody. Happy Thursday. Happy Thursday. We'll get started here in just a minute or two. Hopefully you guys can hear me okay. All right. It's a busy one. It is a busy day. Holy cow, there's so much going on here. We'll go through our top things here in just a sec. Just another minute or so. All right. All right, perfect. Let's get started. Good morning, everybody. Happy Thursday. Serge Berger here from thesteadytrader.com. Hope everyone's doing well. It's Thursday. It's Ticker Thursday, which means we're going to take some tickers and symbols as well that you guys want to look at. Let's quickly go through the basics. If you're new here, please make sure that you subscribe to the channel. Please make sure you give us a thumbs up like. That goes for everyone, by the way. Subscribe and thumbs up like. But also very important to know is what we're doing here. We're going through our top few things on our notepad here as far as the markets are concerned here. There's a lot going on here, so let's get to it. We'll hopefully get through it over the next in the next 10 to 15 minutes. Then I have to jump to a meeting. We're going to do a really important update on Chinese stocks. I'm going to jump on a call with Brendan O'Hearn. He runs the K-Web ETF. It's going to happen in about 15 minutes from now, so I have to run and be efficient here with my time. All right, let's get started. Top things. Number one, I want to look at the dollar index. You guys can see it there. I'm going to enlarge that chart in just a second. That's number one. At number two, we're going to look at the VIX. Number three, two stocks. We're going to look at, I'll tell you what those stocks are. I think you're going to find it very interesting. And then we'll look at maybe two or three tickers that you guys want to look at as well. Again, it's Ticker Thursday. So let's get to it. All right. First of all, very, very, very important. We remain in an intraday volatility environment. This is the chart. I just came across it the other day. And I would really encourage everyone to kind of take this one to heart. And I realize not a lot of people look at this stuff at home, right? If you're an investment advisor or a hedge fund and you're here, and I know a good part of you are, you're obviously watching this, but this is an important deal. This is the trade-weighted U.S. dollar index. So what it means is basically it's not the dollar index as in the DXY, it's trade-weighted. So it's a broader basket of currencies because the regular DXY is mostly euro and yen. So it takes the trade balance to the U.S. Into account. And so this is a really good way of looking at the dollar index. And you can see basically since 1930, we've had 3 times the dollar index has reached these levels. Once in the 1930s, once in, I guess, the 1980s, I think it was, and now. And the equity market may not like this too much if the dollar comes off too hard. So we'll have to wait and see. But my point is when we get to these levels, typically the dollar index doesn't just go down a little bit. It goes down pretty steadily and pretty fast. And so I would encourage everyone to look at this. Maybe go take a picture of this. Use your phone. Take a picture of it. Really think about it. Think what this means, right? And and we can come back and talk about it again on Monday here, or if you, of course, are a member of Inner Circle or in our trade ops chat rooms, we can always start a discussion there. But I want to bring it. It's by far the most important chart that I can show you, probably maybe all year, to be honest with you. It's a bold call here in March, but this is one hell of a chart. So I don't know how many of you guys care or can comprehend how important this chart is, but it is really important. I'm trying to educate you so you know, and just so you know, like, this is not something that I just had a meeting yesterday, a long meeting about this very chart with two big funds right over there. So keep in mind this is important, and yes, it's going to matter to your portfolio. Yes, it's going to matter to your Max 7 stocks, and yes, it's going to matter to your retirement account, like IRAs and 401ks and wherever else in the world you are. Or if you're an investment advisor, yes, it's going to matter to you and your clients. So this is really important. Okay, that's number one. So hopefully this is something that you guys can appreciate. Then the second thing, let's go back to the VIX. Okay, now the VIX, we talked about it all week, and we continue to talk about it because it's important. We remain in the chop zone, right? We talked about sort of kind of breaking the VIX into three levels. So sort of 17 and below, and then 17 to 25 or so, and then 25 above. We're still in the choppy area, and you can see equities are not breaking down in a meaningful fashion, U.S. equities, and so we're still in the choppy period. So what I'm really looking for is a sustainable break above 25 in order to see the equity downside reaccelerate. As long as we're not above 25 solidly, there is an increasing chance of getting a big, sharp, oversold rally. I think there's a possibility of that. I think it's 50-50. I just got off the call with JB earlier, for you guys who know him, and we talked about that, and I've been talking about it all day already, and all day yesterday too with other clients about how that's possible. And if you just look at the S&P, very simply, it is a logical level for the algos to come in. It's a logical level for the administration to kind of pump stocks a little bit. I'm not saying they will do that, but it's a logical level where they could do it, because now the headlines read, well, stocks are now flat to down since the election, right? They may not like that. They may not care, right? But it's something to keep in mind. They may be willing to let the equity market go down quite a bit for short-term pain. Otherwise, the tariffs are not being taken serious, and I think that's an important thought process as well. But nevertheless, I would not underestimate the potential for a pretty big rally here, maybe 2%. And quite frankly, if yesterday's lows don't hold, then we could very quickly go towards 5,500. So I'm open-minded. I've closed all my I've had short futures trades on for the past month and a half very actively, and I'm basically flat now. Right now, I have literally nothing open. So I'm very open-minded, and on this, I still think we have lower to test, but I'm not sure that's right away. That maybe that's some time out, a few weeks, something. I don't know. I really don't know. I'm open-minded. So now that I've confused you enough, no, the point, all joking aside, the point is not to confuse you. Obviously, the point is to show you that there are times when the odds are better. But right now, even technically, even if all you look at is levels, it's more challenging here, at least in my view, and certainly by positioning. Also, I want to quickly share with you, and then look at two stocks. I want to share with you something that I posted in the Trade Ops Buzz and Banter this morning. Let me see if I can share it with you. It is here. What I wrote, and this is per Goldman Sachs. I'll just paraphrase it, or I'll read it out to you. SPY put volume spiked yesterday to the third highest level in history. So yesterday. So basically people are buying a lot of puts now. They're buying protection. The previous two spikes were the bottoms for the S&P, and the NASDAQ 100 put volume made a new all-time high yesterday. So it is somewhat challenging to see the market melt down when you have that type of a bearish sentiment. But again, keep in mind what I keep saying, what I think a lot of people don't calculate. Now there's more alternatives to buy, out there to invest. Up until, honestly, even just a couple of weeks ago, it wasn't that clear. Now, look what's happening. Chinese stocks are up 17% on the year. The DAX is up 16%, and the Dow is down. The S&P is down, and the NASDAQ is down 4%, right? So these are this is, and I know this because I've talked to these people, everyone's been looking for an excuse to get marginally at the margin out of their mega cap tech exposure because it's a crazy concentration, and that can snowball. So even if everyone's long puts and sentiment's bad, that can snowball, right? If the machines takes one big pension fund or one big sovereign fund to start selling some of their exposure to those names, and then that snowballs, that can happen regardless of where sentiment is. So let's keep that in mind. So I just want to quickly point that out. All right. 2 stocks, okay? So Steve is asking, does this mean midterm be long something, not the dollar? Stevie, can you rephrase that? I'm honestly not quite sure what you mean. Let me go through 2 stocks. Okay, first of all, I want to share with you a chart that my colleague JB sent me, which is on Starbucks. We actually think that Starbucks has more downside here, and it doesn't have to fall apart, but it likely will mean revert more. This is a chart that goes back to 2022, and you can see the levels. So around 117, the stock has been backing off of that level for the past couple of days. This is something where, from a options perspective, this is for those of you guys that do options credit spreads, this is an interesting idea to maybe sell a bear call spread. Not a recommendation as always, but purely educational here. That's an interesting idea. And then last but not least, there's a stock. It's called, ticker symbol is ON. I'm going to quickly show it to you. And then if you guys have like one stock that you want to go through, because I'm a bit pressed on time, let me know and I'm happy to go over it. So this is a European company. It's ON Holdings. They make shoes. Does anyone have a pair of ON shoes? It's actually a Swiss company. Okay, so it's not really European. It's not part of the EU. This is an interesting company. So technically, I think everyone can see what's going on here, right? This is a pretty good setup. It's checked back to previous resistance. In fact, if you look at the weekly chart, this looks really good. Now, what I want to point out to you quickly on this company is its sales trajectory. I did a bunch of analysis here over the past 24 hours on this company. And if you look at this company, you can actually see that they just reported earnings earlier this week. They had a 20% sales growth year over year last year. If the analyst forecasts are right, and that's always a big if, they're set to grow about 30 to 35% top line this year, 2025. That's actually an increase in the rate of change, right? So that's actually very positive. And so we actually like this stock. Also, if you think about money being allocated in Europe, there's a lot of capital now at the margin leaving the Max 7s, being allocated to other opportunities. We talked about Europe all week. I'm happy to talk about it more next week. Let me go to 2 questions, and I really have to run, and Joan will look at Microsoft quickly. Steve is asking, what's your view on where oil is going? I have no view on oil right now, Steve. I really don't. And that's okay, by the way. Sometimes I have not a view. I do not know where oil is going to go. I think long term there's a bid because we have the massive demand for energy, but in the near term, I really don't know. And then Steve is asking, I was talking about the dollar index chart you showed. Currency. Yeah, I mean, I would just be long, one could be long euro, one could be long Swiss francs, right? So this is a basically dollar extremely overbought situation from a currency perspective. I was more referring to it as far as equities are concerned, but of course it's a good question. And then lastly, and then I have to run here a bit quicker because Brendan just hit me up that he needs to do the call. Microsoft is still breaking the arch on an intraday basis. On a weekly basis, it's holding. We talked about this one all week last week. We said it broke. Or it's close to breaking the arch. Excuse me. I should. Let me take that back. It hasn't broken the arch. It's holding. Just keep in mind, Joan, if you're asking because you're up to here in Microsoft stocks, notice that it's not necessarily about the fundamentals that concerns me. These companies are still growing. What concerns me about these companies is the concentration. It takes very little of one huge pension fund or one big fund to take down their exposure. It's enough so that the algos kick in, because these stocks are owned everywhere. And if they're now allocating and finding marginally new capital to allocate somewhere else, like Europe or China, which are all beating the living daylights out of U.S. markets year to date so far. That can change. That this can very quickly turn sour. So that's my concern with these Mag 7 stocks. Thanks so much for being here, folks. I have to run. We'll be back here Monday morning. Hopefully this is helpful. Please give us a thumbs up, like, and give us a subscribe to the channel. Very important, so that you get alerted in real time when we go live, and so that we can continue doing this. And if you are a Trade Ops channel member, we'll see you in there. And if you're a TST Trender Indicator member, we have a members webinar taking place in about 2 hours. We're going to do some live trades in there. See you guys soon, and be well.